Hey everybody, welcome back. Maxwell, how are you?
I'm great.
Good, man. Been a good fall?
Yeah.
Yeah?
Yeah. We're sitting here reliving Arkansas
Yeah, we are.
winning football stories, which is
Unique.
super uncommon.
Unique New York. Yeah, very good. Very good.
Feels good, doesn't it?
Yeah, but it also hurts to look and be like, man, that close to undefeated. So we won't get started.
Yeah, let's talk about stuff we have better knowledge about.
Okay,
So.
we can do that. But yeah, been a good fall. It's a big fall.
Yeah.
Big things coming.
Yeah. Big things. You're probably living under a rock if you don't know what's going on in November, right?
Thanksgiving.
You know, honestly, that's the best
Day.
answer. No, it's a great answer, and it's the right answer. How about the next biggest thing going on in November?
Probably the election.
The election.
Which is super uncomfortable to talk about sometimes. And we're going to do this from a financial standpoint here. We're just going to hit some points.
Yep.
Be informative.
That's right.
Just spit the facts.
That's right.
According to these sources.
That's exactly right.
Facts according to these people.
No dog in this fight.
No. The intention of today is to hopefully, after you listen, walk away a little bit more informed when it comes to your finances and kind of what's at stake.
What's on the ballot?
Yeah.
Potentially for you as the consumer and us as banks. And so we'll just chat about it a little bit, and I think it'll be informative. I think it'll be helpful.
Yeah.
And it will also be something that I think is probably going to be something that most people have not thought about or understand completely. So it should be fun.
These aren't necessarily questions that they're asked on the debate stage.
Right.
They're decently low stakes, but also important. And I think it's very important to have an idea of how, it could affect you personally. And so,
and since both presidential candidates are apparently willing to go on, podcasts and other things to discuss, we'll just open up an invite for either one of them if they want to come discuss this with us.
Yeah,
that'd be great, right?
Yeah, we're open. That would be so awesome.
That would be incredible. I mean, we would have made it.
We deserve an interview after how big this thing's gotten.
That's right. So I just want you both of you to know.
Send that to their team.
That's right. This is out
Campbell.
there.
Okay.
This is out there for you to come and discuss
Open
with
invite.
us.
Rogers, Arkansas.
That's right. In the heartland.
Okay. Well, there's no doubt that over the last, really since COVID, the financial ecosystem in our country has been tough. We've talked about, one of our first episodes was inflation. And so we kind of are using this episode as a chance to be informative. I know we talked about that, but we feel somewhat of a responsibility as some of you are customers who are listening. And so to provide clear and timely information for you guys that probably most everybody has their mind made up on who they're going to vote for. We're not trying to sway anybody, but just how some of these potential policy changes could change or stay the same depending on who you vote for. So
yeah, and the consumer impact of it all. Many people want to know how an election could affect them and their wallet, and we'll talk about, based off of some research that's been done, but also based off of customer sentiment. We will talk about what's important to who, and we will try our best to to go as in depth as we can.
Yeah. Okay. Just some overall stats. A lot of people are paying attention to this election, and it really does feel big. So this says that 63% of U.S. consumers are actively following the race. Don't know what that entails, actively following.
Yeah.
But
yeah, I would
it's pretty
assume,
high.
I would assume that's a pretty high level of engagement. You don't have a whole lot of people sitting on the sidelines or the couch,
Yeah.
right? I think you've got, and honestly, anywhere you turn right now, it feels like something's hitting you in the face, whether that's in political ad or somebody, talking about
sign in the yard.
Yeah, talking about it. One candidate or the other. It just feels like it's everywhere. I mean, you can't avoid it on social media, especially.
Yeah.
Right. And then I couldn't imagine if you were living in one of those swing states or battleground states like Pennsylvania or Michigan or.
That's a lot of pressure.
Yeah, you probably don't want to watch TV.
Yeah, I could see that.
It's just every other ad. But
Yeah.
anyways.
But yeah, a lot of people are tuned in, and a lot of people are tying the outcome of what happens in November to their financial future or their financial well-being. And there's no doubt that there's some truth to that. And so here's some stats. I know we did our generation, baby boomers, Gen X, Gen Z.
Yeah. Money throughout the generations.
61% of baby boomers are particularly invested, closely monitoring the election. That's pretty high.
Yeah, that
Retired.
doesn't super shock me, right? They're probably pretty highly invested because of their, they need their money to work for them at high levels as you're kind of getting into retirement or you're thinking about retirement and you want to have enough money to live off of, as well as just they've been through a lot more elections, so
true.
And I would assume for the most part they watch a lot of more of your mainstream type media outlets who that is pretty much all they talk about right now.
Yeah. And on the other side, Gen Z is also watching very closely. For some of them, their first election to vote in, very exciting.
Yeah.
To exhibit your freedom to vote and your right to vote.
That's right.
But from a financial standpoint, in your early 20s, there's some big decisions to make. And so that's another group. I'm not saying that the two in between aren't watching it, but those two in particular. One is looking at, kind of the retirement and the money that they have, and then one's looking at their future and kind of trying to gauge, financially speaking, this is all financially speaking, what are my options here and how will, each candidate play out.
Yeah.
So,
well, the Gen Z obviously is kind of coming into more of their formidable years here out of college or, more of your early to late 20s, starting to look at buying houses, starting to make money and spend money, understanding what happens when your paycheck is for $2,000 and you only get about $1,200 of that.
Yeah.
Where is the rest of that going?
yeah.
I think, just starting honestly, just to kind of get your ears wet a little bit and learn a little bit more about the world, and you're probably hearing a lot from those that you work with or those that you spend a lot of time around that have discussed the impact or potential impact of an election or the 4 years that may come after that.
Yeah. So they're watching. Another thing that this article talks about is them taking on debt for the first time and how that could change based on how the economy's going. We know how that affects interest rates and things like that, but also applying for your first credit card, just all the things that you have to do.
Yeah. Here's some interesting comment here from this article from the Financial Brand. It says a substantial 32% of consumers intend to undertake significant financial actions within the next 12 months. So that's, a third of the population. And that includes buying homes, launching businesses, or entering retirement. So again, that's almost all of those demographics or all of those different generations that we've discussed. But Gen Z emerges as the most proactive, with an impressive 52% of those under 27 years planning for those significant type milestones.
Retirement.
Yeah, not quite retirement. If so, good on you, man.
For you.
Yeah. And then 44% of that are looking to acquire a credit card. 32% are in the market for a savings account, and 18% are considering opening a retirement account in the next year. So
That's a good decision.
Yeah. So a lot of significant financial decisions to be made coming up in the next 12 months, and obviously the election could sway the economy potentially one way or the other.
Yeah.
So
another thing that it talked about were the particular spending habits leading up to the election, and how some people have decided to alter those because of, I guess, what could happen in November. But this says 46% of consumers believe the election outcome would influence their spending habits due to concerns about the future economy. A significant 30% across all generations and income bands remain uncertain how the result might affect their financial decisions, which is kind of interesting. 30% doesn't know, how the election result could affect them, which is like, if the candidates read that, they'd be like, no, that's not what we want.
Right.
They want to present clearly, here's what we'd like to do.
Sure.
But 30%, I might be in that group. I don't know. Kind of hard to predict the future.
Well,
you could have great intentions, but
I'd be curious to know if that was more of the younger generation just not having seen a significant impact in their lives, having been through only one or two elections or election cycles.
Yeah.
Plus, what's interesting, we talked to Ed for the baby
Ed
boomer,
Love.
and he discussed and I've heard this from my grandparents and other baby boomers. Hey, when we bought our first home, it was 18%. Right.
Yeah.
And so what a unique environment, especially an interest rate environment, that they had to participate in. And then you have, like myself and some of the millennials here who are a little bit unaware of what that type of interest rate environment has looked like. And it's really kind of caught us by surprise here in the last couple of years as interest rates rose so quickly. So, for the most part during my life, interest rates were below 6-7%. So that's been an interesting adjustment and change, right? For someone like me, and then for you, most of your formidable years outside of school have been in a little bit of an elevated rate environment, right? Like post-COVID. Yeah. And so you're starting to see, I would assume your habits have been planned around that type of environment, whereas maybe buying a house is more difficult, or, you've seen inflation rise quite a bit, whereas when I got out there wasn't that type of environment. And now you're seeing interest rates pulled back on. So I can imagine there's probably a lot of this cautiousness or wait and see type mentality for folks in your age group.
Yeah, that's exactly what it says. Widespread uncertainty suggests a cautious wait-and-see approach among a sizable portion of the electorate, even as interest rate reductions could potentially impact their future financial choices. So, obviously, that gets tied back to how well the economy's doing and a bunch of different factors that we've talked a little bit about on this podcast, including the jobs report and the inflation report and things like that. So, but uncertainty.
Yeah, and there is a lot of uncertainty. But as the election continues to get closer here, banks and policymakers are going to continue to need to monitor, I think, the consumer concerns and needs, and I think you'll see adjustments made on one end or both sides, depending on what is the outcome of the election. As consumer sentiments change, but I would be curious to see what polling would look like for someone one thing it doesn't really mention, right, is that kind of that demographic in between baby boomers, Gen Zs, millennials. I'm trying to remember, Gen Alpha, is that what it is? No.
X.
Your
Your daughter is Gen Alpha.
That's right.
I think.
Yeah. She's going to have a significant impact on this election cycle.
That's right.
But your Gen X, I'd be curious to know kind of how they feel, if they're more of a wait and see mindset, because I think they've kind of seen it all over the last 30, 40 years.
Yeah, and I feel like when we did that those generation interviews, Gen X almost was in the go zone. They were in the most profitable as far as like. At what point would they have bought a house? Well, it was after the 80s when interest rates came back a little bit. And then they were just in they had, '08 and things like that. But, yeah, very different financial times for them as opposed to a baby boomer or somebody just now exiting high school or college.
Yeah.
So,
and you got more homeowners there.
Right.
You've got more, you probably got a wealthier group of individuals, a lot more earning power and that kind of stuff. And now you have folks that, good, bad, or indifferent. Inflation's made it very difficult to buy a house.
Sure. I want to go over some of these topics. They pulled some folks here. I guess it was let's see, what concerns consumers can allow financial institutions? Let's see.
Yeah, so I think it's more just what are general consumers concerned with from a polling from a general percentage standpoint.
Okay, so these are yes or no percentages. Because I was looking at it, said that doesn't add up to 100.
Right.
So.
Yeah. No, I don't think it's a pie chart, but no,
be a big pie.
It is interesting to see that the most 68% of those that were polled are concerned with the price of everyday goods like gas and groceries.
Yeah.
Makes sense, right?
That does make sense.
I mean, inflation's been anywhere from 6 to 8%.
And that's
depending on which index or what article you read,
and that's something you can't really get around, right?
Right, but that's why I think you're seeing that discussed at a high level in your debates.
Exactly.
That's why both candidates are bringing up different opportunities on ways that they would help augment that, and so it's been interesting to see, the different strategies that each candidate has taken, and we'll talk about that a little bit later. But
yeah, as this list goes down and the percentages shrink, they almost they're all important, but to just certain groups here. So the cost of rent at 37%, where mortgage rates is 20%. Social Security funding, that's a big one.
Yeah,
34%. Healthcare costs 34%. Interest rates. Is that one? Were you a yes on that one?
Yeah, that was me. Social Security is interesting because I guarantee the subset of that group, the 34%, is probably almost 100% baby boomers.
Absolutely.
Right? Who, for good reason, are concerned with that.
Yeah.
There's been a lot of ambiguity around it.
Yeah. But yeah, student loans, pensions at 5%. At the bottom there. U.S. national debt, 19%. Only a couple people care about that. Yeah. It's like, what are we going to do?
Yeah, that's, that's been interesting. They brought it up in at least, both the debates that have taken place in the last month and a half. And both of them have economic strategies that will both add to the national debt, trillions of dollars. So it's interesting that the question is often posed, well, how are you going to pay for that? I don't know if anyone's ever answered it. I think it's probably because there's not an answer to it.
Yeah.
But it's interesting that that's not concerning to a large portion of individuals.
One of the best episodes we did was with Nathan. Do you remember the debt ceiling? Will the debt ceiling be lifted?
Right.
That's crazy.
Yeah.
Good episode.
A lot that goes into that.
Yeah.
I would just say, as for the consumers that are worried about the impact of the election, there will be some impact depending on who you are, depending on what your strategy is for your personal finance situation. But ultimately, I think that banks specifically have to be a little bit proactive in understanding that, hey, banks will remain constant throughout that process. Yeah. But what can we do to be helpful, irrespective of who is elected in November? Are there things that we can do that are responsive to who's elected in November? I think that there could be some key components to be helpful to consumers at that time. But it's been interesting. I guess reading this article was just so interesting to see some of the insights from the research that took place here, just to see how invested consumers are and what they're invested in. So, regarding the election. So, I'm sure many out there can agree with that sentiment. I know you and I agree as well that it's just there's going to be a lot that people are concerned with, and ultimately we'll just have to see how it goes. But as we alluded to a little bit earlier, there are promises that have been made by those candidates, general directions that you may go depending on the party that you represent. And so that's kind of the second part of this episode, is that we're able to discuss that a little bit further. And there's been a really good article here that I thought would be something really unique to talk about, and how the U.S. election specifically impacts the financial sector. So you have the consumer sector and your general consumers, and what are they thinking about? How are they thinking about it? And then what will directly respond and relate to that is the general financial sector as a whole. So we can talk a little bit about what is been potentially promised by those candidates, whether they'll go through with that or not, but also just an overall direction that they might go. So some interesting notes here, and again, we're trying to just give you information, but some of the tidbits is regulation is discussed, right? So in the financial sector, banking specifically, regulation is a pretty hot topic. Yeah. So the regulatory bodies overall are the intensity of how they operate can be affected by who is in office. Yeah. So, one of the things the article says is there will be likely a push for stronger regulation that will ultimately just continue through the Biden administration with the Harris administration in the White House. So that leads to further scrutiny, more intervention by oversight and oversight by your regulatory bodies. So that can look like a lot of different things. That includes both, your traditional banking sector, as well as some of these kind of non-banks that we've talked about before. Yeah. Some of these, kind of nuanced financial institutions that are more in that non-bank sector. But I know that she's made a lot of comments on her campaign trail, suggesting that she would likely like to see there be more proactivity involved on the regulatory side.
Do you feel like that increased regulation could be because of the bank failure that happened a year ago?
Yeah.
And that maybe being a reason that increased regulation could be.
Sure. Yeah. No, you're exactly right. I mean, it's going to be it's likely a more direct response to some of the bank failures that happened in March of 2023, and I think overall you've seen the banking sector be a little less capitalized than it has traditionally been, with kind of the bond portfolio and the bond market that's kind of turned over. So,
will you break that down for our listeners? Less capitalized.
Yeah.
The banking industry has been less capitalized as a result of that bank failure. What?
Sure. Yeah. So the bond market, we talked a lot about that during the bank failures, right?
Yeah.
When you can sell a bond for 5%, but you own it at 1%, you're at a 4% deficit, right?
Yeah.
So that, and you have to realize that loss. Okay. So the market is 5%. You own it at 1%. You would have to realize that loss to date. Okay, so while you're not going to sell it because you would lose money, if you had to liquidate, or when you had to liquidate, you would take a significant loss in that portfolio. Well, banks of any size typically have a decent sized bond portfolio. In that portfolio, if you have all of these we call them unrealized losses, if you have all of these unrealized losses, that is a direct impact and a direct hit to your capital or your equity within the bank. And so
you're saying overall the banking industry maybe has some unrealized losses and
correct.
So, okay.
Yeah. So there's the unrealized loss that is held within those portfolios it's called OCI, so other comprehensive income. Don't ask me to describe that, but basically there's unrealized losses in the system, and you have to calculate capital based off of that unrealized loss.
Understood.
And subtract that from your overall capital number. So as rates start to fall a little bit, that margin decreases and you realize more capital at that time. So
on paper.
This is all on paper. This is all based off of sort of your doomsday situation or your total liquidation situation, but that's how the accounting works.
Okay.
So,
and how that ties to regulation.
Yeah, well, your regulatory bodies have they have capital limits. So a bank has to have a certain amount of capital. Yeah. And if you're bumping up closer to that, they start to get a little nosier, or they pay more attention. That's probably a better way to say it.
Pay more attention?
Yeah, they pay more attention, and you're starting to see more banks be closer to that kind of that threshold or that number.
Okay.
So there's a lot that goes into that, and somebody may say, hey, this is a bad position that banks are in, or somebody may say, hey, this is just a position that banks are in, and it will improve over time. So it just kind of depends on the lens that you look through.
Okay. So heightened regulation with a Democrat in the White House, and with a Republican, deregulation from where we're at today. Yeah,
I think traditionally what you've seen is a mindset of loosened regulation. Deregulation is oftentimes tough because you have to either rewrite different policies or procedures or legislation to deregulate something. But one of the most interesting things about less regulation or looser regulation is that, again, it's oftentimes the lens that you look through. So you may see the exact same institution or the exact same you may see the exact same set of data in regards to either a financial institution or the economy as a whole, and you can look through it in two different lenses, and you can interpret it two different ways. And that's really what we're talking about here. One sees that and thinks, okay, I would say tends to be a little bit more of a glass half empty type approach, a little bit with the Democrat side, just because it's like, hey, this is the situation. This could get really bad, and if it gets really bad, it has a significant impact on the U.S. economy. Fair?
Yeah.
The other lens would be, hey, this is a situation that we're in, but there's the ability to work out of that situation. Things are progressing and could get better, and if they do, and we don't intervene and we don't mess with it, we just kind of let it work its way out. Gotcha. Then that will overall be better. That will be better overall for the U.S. economy. Does that make sense?
Yeah.
Yeah. So it's just a different mindset and different lens.
Okay. What about some other items here? We've got down consumer finance could be a big one. So a win by Harris. Fees. This is specifically in the banking industry. So restrictions on fees for late credit card payments and overdrawn accounts. imposed by the CFPB would remain in play, which directly affects people and us.
Yeah, it does. So the CFPB is really interesting. The Consumer Financial Protection Bureau. Did you already say that? I may be restating that.
CFPB.
Okay. Yeah. So the CFPB is really interesting. It's a government agency. It is very highly representative of whoever their leader is. I can't remember if there's a chairman or what he's called, what they are called, but it kind of changes on a whim. So whoever is oftentimes elected will change out the top person in the CFPB, which theoretically drives the entire agency.
Yeah.
And so changes are during the Biden administration and potentially during the Harris administration, there would be a larger focus on what is called, in parentheses, junk fees. So you've got your transaction fees, your overdraft fees, just general fees
Statement
that
fee.
are across the board. Okay, there's kind of been an attack more or less on that, and that's pretty much a direct directive that's been given down by the head of the CFPB. Well, if Trump is elected and the Trump administration, there would almost 100% be a change in the head of the CFPB, which would then kind of more follow through with what that administration would have in mind, which would be less of a focus on that type of stuff, and more of a focus on almost kind of rewriting the book a little bit. Does that make sense?
Yeah. Yeah, the article talks about if Trump won, who he would appoint to head up the CFPB would be important for everyone to watch.
It would be. Yeah, and it's really not talked about very often, which is interesting. A lot of people talk about the Fed. A lot of people talk about the FDIC from a financial sector standpoint, but the CFPB is not discussed a ton.
But there's definitely a couple important positions. I feel like they should almost campaign with them.
Yeah.
Give us some transparency as to who would be over these things.
No, for sure. I mean, there's DC is interesting. I worked up there for a summer, and it is interesting how and I've got a buddy that lives up there and works up there, how we're talking about, the potential impact of the election, and it's different in who your neighbors are, because if one administration wins, then they call it a wave, whether it's a red wave or a blue wave, and it's literally changes the whole dynamic of DC based off of who's elected.
So the realtors up there are just hoping it goes blue red, blue red,
blue
red.
Yeah, they're making bank on that. So
they're like blue, red. No, everybody's gonna stay.
That's exactly right. They've probably had a good last 20 years.
Yeah, every 4 year they have a banner year.
But anyways, so there could be some changes that are directly reflected there.
Okay, bank mergers and acquisitions.
Mm-hmm.
How about that? So with a Harris win, here's what it says. Federal financial regulators have been subjecting banking deals to greater scrutiny, especially those that would result in a combined bank with more than $100 billion in assets.
Yeah.
$100 billion is pretty big.
Those are large institutions.
Yeah.
But for the most part, what you see is there's just going to be more red tape that's involved in merger and an acquisition from the Democrat side, and then that's going to be a lot different from the Trump side. So,
and I think I was reading about a CPG who was thinking about acquiring another company, and this being a topic as to who was in office could definitely affect whether the merger went through. So,
there's a lot of companies, large companies that are hinging probably what the next 4 years looks like for them based off of the election.
Yeah. This says a win for Trump would mean regulatory forbearance. Say that 3 times.
That's right.
A changeover in agency leadership could lead to a less restrictive approach to bank mergers, although mega banks might still face constraints. Would you
Yeah.
classify us as a mega bank?
Not at all. No. And I think that
Semi-mega?
I don't know if any part of the word mega would be in what we are, but that
So it's basically you just have one side and the other.
you
Restrictive and a little less restrictive.
Right.
On all of these policies,
Sure.
it seems like.
sure.
So-
yeah. You've got. Have you ever heard of the invisible hand?
No, I've never seen it
Yeah. Well, it's because it's invisible.
doing its job.
Yeah. So the invisible hand is the concept of if you don't touch things and you just kind of let things work themselves out, they will.
Yeah.
From an economic standpoint. So you see more of that on the Republican side than you do on the Democrat side. You see more involvement, more regulation, more. So the box gets smaller, if that makes sense. The box that you can operate in just continues to get smaller, which there's not much gray, very black and white a lot of times.
Yeah.
With a change in administration, you see the box is larger, and then there's less boxes in it, right? There's a
Yeah.
lot more gray, a lot more room to operate. So you've got a little bit more of an invisible hand type approach
Okay.
in that situation.
All right. How about non-bank oversight?
Yeah, we talked about that a little bit. So that one's interesting, and I don't have a ton of knowledge on the non-bank oversight, but
It says efforts to increase oversight of non-bank lenders would likely continue gaining momentum.
yeah. So that's a little bit of the same thing we were talking about. So when you say non-bank oversight, which side? That's on the
That would be on the Harris
side. Yeah.
It says that these efforts could create a headline risk for insurance and asset management firms that operate in these markets.
Yeah. So you've got some institutions that are basically not classifying themselves in order to not be regulated. Does that make sense?
Yeah.
So they've done a good job of finding gray in the black and white, if that makes sense, and they're not classifying themselves as a bank or a financial institution per se, and so they're not subject to some of the regulatory
Interesting.
regulations that a true financial institution would be. So basically, my understanding is the Biden administration and potentially the Harris administration would try to gain ground on more active oversight over that and try to bundle it a little bit more altogether.
Okay. Yeah. So some new policy there.
Yeah.
As that's kind of become a new thing in the last
It
decade.
is. Yeah,
So,
yeah. No, it's new and it's
probably
kind of out
decent.
there. Yeah.
and a win for Trump. This is the last one. Federal agencies would likely be disinclined to push for further regulation of the non-bank financial system, barring a crisis. So you go back to letting it play out, and then, hey, let's step in and maybe do something here. So,
Yeah. Well, you can even just see in the wording in those two boxes, it's a significantly more. No, you can't. Obviously, if you're listening to us, you can't see this, but it's 2 or 3 different paragraphs for each one under the Harris administration, and it's roughly 1 under the Trump administration. So it's just less. It's just less, right? More or less is kind of what it is.
Yeah.
From an oversight standpoint. So it's interesting to see what could potentially happen and how that would shake out, and ultimately where from a consumer standpoint, where you see a direct impact from that is if there are potential additional costs that are in play due to more regulation, you may see those passed down. So that's one thing to think about. If there are non-regulation on things that need to be regulated and regulated appropriately, you may see some like stalwart type institutions who have not kind of been what they've been for a while start to hurt and challenge. And so, that's a potential concern, especially some of these non-banks that are coming into the market. And so, and then with both, you do see a little bit more of oversight on the mega financial institutions, which have a lot of power. So it's interesting that they're both focused on that.
Yeah. Unless they need them to come save the day like Chase did last time. Remember they came in and bought SVB and all that. They're like, yeah, we're just going to ignore this for a little bit.
They're oftentimes a little louder in the room, as you can imagine. But yeah, as a consumer, I would pay a lot of attention to see how the financial industry and the economy is affected overall, because it'll affect your pocketbook and your wallet. So,
pocketbook?
Yeah, your pocketbook.
What is a pocketbook?
It's just another word for a wallet.
A small book?
Yeah. Never heard of pocketbook?
No, I have. I think I'm just now realizing I don't know that I've seen one. Checkbook?
No,
Checkbook with a little leather case on it, maybe?
No, I think a pocketbook would be more. It would look like it would probably be like a checkbook.
I'm thinking you open it like the
potentially
the crime scene guys have.
Hey, quick trivia for you. I know we didn't have anything planned.
Yeah.
What is the little pocket in the jeans pocket for?
I'm gonna say coins.
No.
The button, extra button.
No.
That was a decent guess.
It was. I do think it always ends up in there.
A pocket knife.
No.
Is another good guess.
Yeah.
I don't know.
You're over. Pocket watch.
Oh.
Isn't it interesting that we still make jeans?
And nobody notices them except you when you're reaching in there and you're like, crap, I got wrong pocket.
Yeah.
That's a small pocket.
Yeah. And when you jam your fingers, getting it stuck in.
Yeah.
No.
If you've ever put something in that little pocket, it's very hard to get out.
I'm just surprised that no one was like, we better take these out.
Yeah. Yeah, we don't need that anymore.
Yeah. But
okay.
Yeah. There's your trivia for the day.
Yeah, thanks.
Okay.
I don't have any good trivia for you, sorry.
That's okay. Well, I know that's a lot of information and kind of information overload, but continue to be informed. We'll do our best as a financial institution to help inform you. We'll do our best as a financial institution to pass along as much information as we can, because this impacts us, right? Further regulation impacts us. Less regulation impacts us. We didn't even talk about taxes and their plan for taxes and tax on small business or large business or corporations or even the individual. So if you're a consumer, and it looks like most people are paying attention, 63% actively following the race, don't be afraid to reach out to your financial institution and just say, hey, how will this impact you, therefore impacting me? Yeah. And I'm sure.
And I will
be happy to share.
Give you Max's number.
We'll talk. Well, it was fun. It was different, and this was fun. And obviously we're
edgy.
We're a little edgy, but we're here to here to communicate most of all, and then just be helpful and responsive in this time.
I learned. Thank you.
Yeah. All right. And go Hogs.
Go Hogs.